welcome to the ET Money Show. While we are well underway into a new year, remember the ongoing financial year will end only on March 31st, which means that if you are a salaried taxpayer, you must get your finances and investment right in order to avoid any last-minute rush. And on to the ET Money Show today, we understand that taxation could get complicated for an ordinary taxpayer. And therefore, to give you a complete guide, we have on board Preeti Khurana, who is the Director of Advocacy and Regulations at ClearTax. Hi, very good evening, Preeti. Thank you so much for joining us today on ET Now.
Thank you for having me.
Okay, Preeti, so 31st March still has some time. We are just 3 months away from that. But just wanted to understand from you, which are the basic points that one needs to keep in mind if we are talking about a salary taxpayer. So for 3 months from now, which are some of the pockets that they should be looking out for? We will go and deep in some of the deductions that are planned, but just to set the stage, what are some of the key points that one needs to keep in mind?
Yeah, I think as you very rightly said, the financial year is about to end, which is going to be 31st March 2023. And it's high time for people to make sure that they've done their tax saving investments. Sometime later this month, employers will begin asking for tax saving proofs, which means that you will have to provide proof for if you've deposited into PPF or if you've done a 5-year fixed deposit or whatever you have invested into, whatever instruments you have invested into to claim your tax saving deductions. Employers will start asking for those. And also, this is an opportune time for you to make sure that, you have all the receipts in place. If you are claiming HRA, then you should have the requisite documentation, rent agreements, rent receipts. All of that may have to be submitted. Now, it's very, very important to understand that the onus of making a proper tax deduction is on the employer. And therefore, they are free to choose a date and ask you for proofs so that they can make accurate tax deductions for the financial year and deposit it with the government on your behalf. So that's the first very, very important step, to make sure that you have all the proofs ready. If you've not made the investments yet, then you should make them right away. Keep all the proofs handy so that you can submit to your employer and make sure that, whatever reimbursements you want to claim. So many employers also provide reimbursements for, say, telephone bills, broadband bills, or you could be reimbursed for books and periodicals. So whatever reimbursements you are eligible to claim, bills for those you must submit by the timeline that the employer has given you, because unless the employer reimburses, you will then, if they don't reimburse, if you don't submit the bills and it is not reimbursed, tax will be deducted on it. So you have to make sure that all this bill submission activity also happens on a timely basis. And most probably it will be sometime later in this month.
Okay, so the first step that you need to take care of is get your documents in place and also look out for some of the reimbursement that you can be claiming out for. But Preeti, let's get ahead and let's talk about some of the deductions that are lined up. So if a person is a salaried class, we know that we get an HRA component, and some of the other reimbursements, like you were mentioning, are also a component of the overall tax. But just wanted to know from you, what as per you feel that some of the points that are clearly missed out by the taxpayers that they should be looking out for? Any point out there that you wish to highlight for our viewers that they need to keep in mind this time around?
Sure. I think that's a very important question. When it comes to deductions, it's very important that you make the best use of Section 80C. Now, Section 80C is a deduction where you can claim 1.5 lakh every financial year. Now, when I say you can claim, it simply means that if your salary is, say, assuming your total annual salary is rupees 10 lakhs, you are allowed to reduce 1.5 lakhs and you will only pay tax on the remaining 8.5 lakhs of salary or your total income. Therefore, you must try to exhaust Section 80C completely. You can claim 1.5 lakhs. So whatever your total income is, it will be reduced by 1.5 lakhs. Now, there are several ways to go about that to, exhaust ATC. Some people invest in PPF, some people go for ELSS. And as you asked, what is the most common mistake? So this is actually like when we looked at numbers from ClearTax, we saw that almost 40% of people who were filing taxes with annual income exceeding rupees 8 lakhs were not exhausting their ATC fully. So make sure you exhaust ATC. Now, one way to do this is through the EPF deduction that happens, that your employer deducts on a monthly basis and deposits to your EPF account. You will find that amount in your salary slip. If that is not sufficient to cover the 1.5 lakhs, then you must invest in other products, which could be ELSS, which is equity linked savings schemes, where the minimum lock-in is 3 years, or you could be looking at PPF, where you can invest as much as you want, or you can invest 1.5 lakhs every year. Then there are several other ways. There are education expenses, school fees of children, which you can claim if you have a house property and you are repaying the principal portion of the home loan, then that can also be claimed under ATC. So make sure that you're exhausting this deduction, because it has the ability to reduce your total taxable income by 1.5 lakhs. Now, another important thing to keep in mind is that while employers may be asking for proofs, it may so happen that you're not able to do these investments on a timely basis. Therefore, just remember that you can make the investment by 31st March. And then in your tax return, it may not, when you file your tax return, the employer may not have considered ATC fully, but if you have made additional investments, you've exhausted that 1.5 lakhs, then at the time of filing your tax return, you can claim ATC, you can exhaust it fully, and probably then you'll have a refund situation.
Okay, so that there you highlighted a very interesting stat that almost 40% of those who were having a salary exceeding 8 lakhs didn't even exhaust fully their ATC. But Preeti, moving on and trying to link this connection with another question that I have for you, because a lot of first timers will also be filing the tax. So my question is regarding them, that the one who is going to file the tax for the first time this year around, what will be your advice for him? Because we are just 3 months left, and just getting an example of, for example, if we take the salary bracket between 5 to 10 lakhs, and if that girl or a boy hasn't planned anything regarding tax saving sort of a scheme, then what will be your advice regarding the same, that where they can actually invest, and which all sections or some deductions that they should be looking out to exhaust fully?
Right. Very important question. And, my first advice would be for these newly minted taxpayers to actually look at certain documents, which would be very important for them to truly understand what their total income is looking like. Many a times, first time filers don't have an idea that, they have to pay tax on the savings account interest and where to locate your savings account interest. If they may have fixed deposits, which maybe somebody has gifted to them, or they have a fixed deposit running for them since a long time. So I'm assuming all of these taxpayers definitely have a PAN number. Now, moving ahead from that, they should look at their Form 26AS, very, very important form, to understand what are the various TDS deductions that have happened, to also look at the tax calculation the employer has done. So the employer will usually provide you an annual tax computation, and it's a good idea to sort of understand various components, see what is taxable, where they can claim benefits, and look at what are the various deductions that have taken place. Also, it's a good idea to look at Form AIS, which is the Annual Information Statement. Now, together with all of these documents, which may be their payslip, their annual tax computation, their Form 26AS, and the AIS form, they will get a fine idea of what their total income is looking like. Now, it's also important that, if they have any investments, could be in the stock market, mutual funds, equity shares, or if they have fixed deposits, bank account. So sort of collate all the statements from these sources, look at your bank account statement, see if you have any dividend income, look at your mutual fund statement. If you've made any exits, then you may have a certain tax outgo. So the first step would be to look at what your total aggregate income is looking like and what the tax outgo is. Now, if you have any tax due, it would be wise to pay that well in time so that you don't end up paying penalty on unpaid taxes. That's the first bit. The second bit is coming to your deductions. Now, if you are eligible to claim, various exemptions such as HRA, or LTA, or if you have reimbursements, do that. Then come to section 80C. Now, if you're, between the 8 to 10 lakh bracket, it may not be possible for you to have enough cash flows to make investments. Yet, if you don't have, a large number of expenses, or if you have enough cash flow for the coming 3 months, you can even consider doing an SIP into, say, an ELSS. So look for a ELSS which is well performing, and consider doing like a split the amount that you need to invest to exhaust your ATC, split that amount into 3 installments and begin from January, do one in February, and then do one in March. And then this investment, even though you may not be able to disclose to your employer because it didn't happen within time, you can claim it at the time of filing your tax return. So try to exhaust section 80C. If you have any health insurance premium that you're paying from your own pocket, or if your employer is making a deduction, because you have insured your parents, then you can claim that as well in your tax return. You'll also find it in the Form 16, which may actually come in much later. It comes sometime around June, July. And by that time, it's actually the time has gone for you to make any tax saving investments. So consider looking at exhausting all the exemptions, claim all the reimbursements, and ATC. Just check from your annual tax computation whether you fully exhausted or not. If you haven't exhausted, then try to create a cash flow or try to do a SIP, even PPF. You don't have to make a lump sum deposit. Whatever money you can set aside and deposit in your PPF account, that will be also be eligible under Section 80C.
Okay, so that was quite a detailed answer for all those first timers going to pay the tax this time around. But Preeti, moving on, and we have discussed a lot about all those salaried class, but let's switch to the business class. So they also have 3 months and they have a wider spectrum to claim some tax deductions. So going ahead, what will be your advice that where they can actually, because somebody who is maybe missing out on some of those aspects. So similar question, but on the other side, that which are some of those least taken into account deductions by the business professionals? What will be your view on this?
Yeah, I think if you are a small business, if you're a freelancer, if, you're somebody on your own and you're running a business, then in my view, the most important thing you need to do right now is make sure you paid your advance taxes. The last installment is due sometime later, but the one that just went by in December, if you missed it, then make sure that you estimate how much advance tax you need to pay, and pay it up on a timely basis. I think that's the first thing that any business owner must do right away. The second thing is definitely, what are the expenses that you're eligible to claim. So, for example, say if you are, you do coding or you do quality testing. A lot of youngsters are into QA testing for foreign, technology companies, and in that situation, they may have invested in, say, a new computer, they've bought new hardware, or they have an internet connection, or they've actually taken up a place on rent. Then all of these expenses, which have been directly incurred to earn your income, are eligible to be deducted. So be mindful of that. As an entrepreneur, as a freelancer, you're also eligible to claim all the deductions such as ATC, ATD. Make sure that you do the same thing, exhaust your ATC of 1.5 lakhs. If you've invested in a health insurance, if you haven't so far, then especially for those who are running a small business or who are freelancers, it makes a lot of sense to go for a health insurance policy because they don't have group health insurance that salaried people have. So go for it. See if you find a suitable policy in the coming few months. It will help you claim a deduction under Section 80D, and it will save you some taxes. Also, the other important thing is to make sure that you have created accounting records if you're required to. So whatever kind of bookkeeping you need, if if your business is eligible towards that, then make sure that you have those things in place. GST, another important aspect. So if whatever you're doing, GST is applicable, then that's another compliance that you must perform, because now income tax returns require you to report the and total revenue as per your GST return, and the same thing has to be reported in your GST return, as to what your total revenue is as per your income tax return. So that kind of reconciliation you must carry out. You must truly understand. So for a small business, for a business owner, a lot more work to perform, to look at again their Form 26AS. People may have made certain tax deductions, so make sure that you're collating all the receipts and putting that together to calculate your tax outgo.
As I track autos as a sector, so I know that going ahead, maybe some time in March, the car sales actually inch up because a lot of people actually try to have the depreciation deduction to be made in their tax filing. So just want to know from you, apart from this particular fact, is there any other asset class where they can actually claim such depreciations, and any other tricks that they can actually save their tax on?
Yeah, so essentially, just go with the whatever the Income Tax Act allows you. And like I said, you have whatever direct expenses you have incurred, to earn your income. For example, you may be using your mobile phone, or you are actually using your own apartment. You set aside a room to provide your services, so you can actually split the rent in a fashion that you're able to claim rent for that space. You can, as you said, depreciation is eligible. And if you have any other kind of capital assets which are allowed to be capitalized as per the Income Tax Act, then apply the depreciation, claim that depreciation as well. Yeah, so all direct expenses, if you've kept in, maybe you have an office boy, or you have another employee in your setup, then whatever payments you're making to that person, those are also allowed to be claimed. You can claim, if you have annual charges on, say, any kind of credit card that you've taken for your business, or so these are like these small amounts here and there that you may be spending towards your business. If you have a proper receipt, if you've made the payment, then you can just sort of claim that as well when you're preparing your tax return.
So much for highlighting for all those direct expenses that can be claimed. But with this, Preeti, we'll let you go on that. Thank you so much for joining us today on ET Now, and it was great having you on the channel today.
Thank you for having me.
Okay, but with this, it's time to slip into a short break, but don't go anywhere. We have many such interesting discussions lined up on the other side of the break, so stay tuned.